What are investors betting on? If you had a way to see what thousands of investors were betting on right now, wouldn't you want to know? Well, ETF flows gives us a pretty good picture. US listed ETFs have attracted nearly $1.3 trillion so far in 2026. But the more interesting question isn't how much money is going in, it's where it's going. And one of the clearest trends is still AI. But the investment story is getting bigger than just the companies building AI models. Investors are also looking at the infrastructure needed to support AI: semiconductors, memory, data centers, networking equipment, and power. Investment themes attracted around $10.8 billion in the first quarter, with infrastructure, robotics, AI, and nuclear energy among the areas attracting significant interest. And there is a reason for that. More AI means more computing. More computing means more data centers. And well, more data centers mean more electricity. That brings us to another trend: energy. Energy was the strongest equity sector for ETF flows in the first quarter, while nuclear energy was also among the popular investment themes. Then there is defense and industrials. High defense spending, infrastructure investment, automation, and robotics are creating opportunities across aerospace, defense, and industrial companies. So the investing part isn't just that investors are buying AI. They're positioning around several changes happening in the real economy: more computing, more power, more infrastructure, and more automation. That brings us to section 2. It's not just about growth. But here's what makes the 2026 ETF story interesting. Not all the money is going into growth themes. Bonds are attracting significant capital too. Global fixed income ETFs attracted around $292 billion in the first half of 2026. At the same time, investors continue to put substantial money into broad market equity ETFs. So this isn't simply a story about investors chasing the next big technology theme. They are doing several things at once. They are buying broad market equities. They're investing in specific themes such as AI and infrastructure. And they're adding bonds for income and diversification. That distinction matters. Thematic ETFs get a lot of attention because they are tied to exciting stories. But broad equity and fixed income ETFs still account for a much larger share of overall flows. So if you're trying to understand what investors are doing in 2026, the picture is fairly straightforward. They're looking for growth. They're looking for diversification. And they're positioning for some of the longer-term changes they expect to see in the economy. What does this mean for Indian investors? So what does this mean if you're investing from India? The first thing is access. The US market gives you exposure to companies and industries that aren't as well represented in India. Semiconductors, large technology companies, aerospace and defense, global healthcare, and the broader US market are some examples. ETFs can provide exposure to these areas without requiring you to select individual companies. The second is diversification. If your portfolio is invested only in Indian assets, its performance is closely linked to Indian markets. International exposure can spread your investments across different markets, sectors, and currencies. But international investing doesn't eliminate risk. Markets can fall, thematic ETFs can be volatile, and bond ETFs can lose value when interest rate changes. There's also a currency risk. If you're investing in the US dollar asset from India, your return in rupees depends on both the investment's performance and the rupee-dollar exchange rate. So don't invest in an ETF simply because it is attracting money. Understand what it owns, how concentrated it is, what it costs, and how it fits into your portfolio. Because the point of following ETF flows isn't to copy other investors. It's to understand where investors are allocating capital and why. And in 2026, some of the clearest trends are AI and its infrastructure, energy and power, defense and industrials, alongside broad equities and bonds. Those are the trends worth watching. That's it for this video. See you very soon.